Hello and welcome to Markets Today with me, Luqman Hariz, where we discuss market happenings of the day and also dissect analysts' opinions on the counters that matter. It is 5:45 p.m. on the 19th of May. The Ringgit closed at 4.32 against the US dollar today. The FBM KLCI closed higher at 1768.28. The big news of this hour, Bank Negara's first quarter GDP announcement. Here's the story. Malaysia's GDP grew 5.6% for the first quarter of 2017.
Growth was supported by strong performance of domestic demand. On the domestic front, growth sector expenditure recorded a strong growth and remained as the main driver of performance.
Muhammad says also spurring the higher-than-expected growth was exports, which grew 9.8% compared to 1% in the same period last year. He went on to add public sector expenditure also became more supportive of growth this time around. And join me to dissect the performance of the nation's first quarter is Shan Saeed, IQI Global Chief Economist. Thank you so much, Shan, for joining us. Now, if I can pull up the graphic there of the GDP numbers for the first quarter, and if I may direct your attention towards it, as you can see there, quite monumental, 5.6% growth for the first quarter, Shan, compared to 4.5% in the last quarter and 4.1% in the first quarter of 2016. Even quarter on quarter, it's 1.8 to 1.3. It is quite monumental. To be honest, I didn't expect it to even exceed 5 for the quarter. What are your initial thoughts on these findings?
I think the economy has shown a lot of resilience despite volatility and financial fragilities in the global markets. I think it shows that aggregate demand, economic confidence are the key for the Malaysian growth trajectory.
If you look further into this, let's pull up the graphic on the GDP sectors, particular sectors that actually brought up the GDP for the first quarter. If you can see there, agriculture deserves a special mention because it went up by 8.3% for the first quarter of FY17. This is compared to a contraction of 3.8%, negative 3.8% for the first quarter of 2016. Construction is big as well, 6.5%. So these are the sectors that have actually driven up the first quarter GDP performance. Do you think these sectors are going to remain key sectors for the quarters to come?
I think in one of my interviews I did mention that construction, agriculture and service sector will continue to drive Malaysia's growth story, and that is happening right now. And these are the key sectors for 2017 and 2018.
We have quite monumental infrastructure developmental projects in the pipeline for Malaysia. What do you think this is going to do to the GDP growth for the second and third quarter?
I think if you see in Belt and Road, Malaysia is an important part of the equation. So I think construction, service sector will continue to be in the limelight, and that will continue to drive Malaysia's growth story.
And another major growth catalyst for the first quarter GDP is exports. If you can see here on the screen right here, gross exports by products by Bank Negara Malaysia, you can see that for the first quarter of 2017, a total of 21.4, and a big chunk of that is dominated by resource-based exports, followed by E&E, electronics, electrics and electronics. So do you think these sectors are going to be key moving forward to actually driving up foreign direct investment and also GDP growth?
Absolutely. Last year, Malaysia's FDI was at around 208 billion ringgit. I mean, that shows that manufacturing, service sector, construction, I mean, they are getting a lot of investment from abroad, and that is important to keep the economy on the upsurge. Not only that, I think as Bank Negara Governor said, aggregate demand, economic confidence, and I think I give full credit to Bank Negara for keeping a very prudent macroeconomic policies to drive the economy forward.
Well, for one, let's talk about the things that are going to affect the man on the ground first. Inflation, for one. If you can bring up the inflation graphic that the Bank Negara has actually shared with us when they announced the results just now. As you can see, for the first quarter of 2017, crude oil prices stood at $55 per barrel. This is compared to only $35 per barrel in the same period last year. Prices at the pump, 2 ringgit 23 cents per litre compared to 173 for the first quarter of 2016. So there have been monumental increases in basic items that contribute to the CPI and to the inflation. But recently we've seen a 4.4% increase in inflation for April. This is after a monumental 5.1% in March. So what do you think this will do to inflation? Will we see a continuous downward trend for the men on the ground, lower prices?
Yes, appreciating currency always, curb inflation, and depreciating currency welcomes, inflation. So right now, if you see, ringgit was trading at 448 in December, and right now, as you said, is trading at 432. So ringgit has actually appreciated 2% against USD in the last 4 to 5 months. But some analysts did mention it will touch 5 and 5.8 and whatnot. But in fact, ringgit did appreciate and took a pullback. So I think ringgit will continue to appreciate. The fair value of ringgit is between 410 and 430.
It's interesting that you mentioned ringgit, because if you can bring up this graphic of the ringgit here, according to Bank Negara, it rose quite significantly, as you said just now. We don't need the central bank to tell us that. Since the start of the year, it has rose significantly against the greenback. Now, when we talk about inflation and also about the ringgit, with the ringgit increasing now against the US dollar, are we looking at the prospects of lower imported inflation and cheaper prices because of our appreciating currency?
Absolutely. I see inflation to remain subdued, and it will fall between 3 and 3.5% moving forward.
How about the foreign direct investments? What do you think it will do to the sentiment? This is especially after news such as IWH, CREC disagreement and the lapse of the SSA, which some say would affect sentiment on the FDI coming into Malaysia into infrastructure. So is this welcome news? What will this do for FDI sentiment?
I think that was just one micro event. I mean, micro events, as I said, do not drive the macro events. So I think at the end of the day, the investors are actually looking at the economic confidence of the country and how well the government is in control of the economy. So right now, economic confidence, a strong aggregate demand, the government is in total control of the economy and modern infrastructure. These are the key variables that are taking Malaysian economy on the growth path.
All right, we've seen 5.6% very quickly. Next quarter, what's your forecast?
Between 5 and 5.5%.
The positive momentum is going to be sustained.
Absolutely.
Thank you so much, Shan Saeed, IQI Global Chief Economist, talking to us about the findings of the first quarter GDP. Marcus, today we'll take a short break. After this, we'll discuss about the trouble in Brazil. I'll talk to the Vice President of Forex Time on the economy of that country. Don't go away.